So do you have any questions?
Maybe I should go on, sure, I will understand more. But for now,
Okay.
just following the trend though.
It's okay. Okay, so my name is Maxwell Emmanuel, Forex trader. Okay. The founder Traded Max Forex Academy, an academy that was established to educate and equip existing and prospective Forex traders with the accurate information required to trade Forex profitably. In today's class, we'll be looking at the basics of Forex trading. The basics of Forex trading. First, I would want to talk about the risk that is involved in trading Forex. Okay, trading Forex carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Why is the risk in the Forex market very high? There is what your broker offers you, which is called leverage. Okay, leverage affords you the opportunity to purchase high contracts with small amounts. That is why the risk in trading Forex is very high. You can't get such leverage in other financial markets. When the Forex market, with as low as 200 US dollar, you can trade like the guy that has $100,000 in his account. That means you can purchase the same quantity of currency that guy that has 100,000, that trader that has 100,000 would purchase with just $200. That is why the risk in trading is very, very high. Okay. Now, in subsequent class, we're going to be looking at risk and money management, how you can minimize your risk and maximize profit. We'll look at that in subsequent classes, and I'm going to explain what leverage is in details in subsequent classes. Okay. So what is Forex trading? Now, the word Forex is an abbreviated word from the two words foreign exchange. And what is foreign exchange? Foreign exchange is the exchange of goods and services between two countries. The exchange of goods and services between between two countries. Now, when these countries trade, it is mandatory, it is a must that they trade their currencies. Right? It's a must that they trade their currency. So as they are exchanging goods and services, they would have to trade their currencies. For example, if I want to travel out of Nigeria, I would need to exchange my naira to dollar, right? So I would approach the aboki or approach the bank that I need dollars. So let's say I want to buy $1,000. At the moment, the exchange rate is at I think 450 naira per dollar. So if I approach the bank, I need $1,000. I would have to pay them 450,000 naira to purchase $1,000, right?
Yeah.
So at that time, what am I doing? I'm doing two things at the same time. I'm selling my naira and at the same time buying the dollar.
Yeah.
That's why forex trading is said to be is defined as the simultaneous buying and selling of various country currencies. So as you are buying, you are what? Selling also.
Selling.
Yes. So that is what foreign exchange or forex trade is all about. If I want to import a product from China, I would have to exchange my naira to Japanese yen or yuan. Yeah, yuan. That's what they use in China. Yuan. If it is from Japan, I would have to trade my naira for the Japanese yen. So that is what forex trading is all about. Okay.
Yeah.
Now, what is the similarity between forex and the stock market, the forex market and the stock market? Now, when you invest or when you purchase the stock of a company, you are investing in, when you buy
The
shares of a
company.
company, yeah, you are investing in that company with the hope that in the future the value of that share would appreciate. It is when the value
Yeah.
appreciates you make what? Profit. So you
Profit.
buy at a low price so that you can sell at a higher price, right?
So,
That is
yeah.
how you make profit in the stock market. Now, in forex trading, when you trade currencies, you are investing in the economy of that country.
Yeah.
For example, if I purchase US dollar now, I want to hold US dollar. If I buy US dollar and keep it or save it in my domiciliary account,
Yeah.
now I expect that the value of dollar would appreciate in the
All
future.
right.
That is why I want to hold on to that dollar, so that when it
Yeah.
appreciates, I would sell it. As at last year, I think November, as at last year, the exchange rate was around 360, 365. That was the range. November last year. Now it's 450. So let's say I purchased $1,000 and I saved it in my domiciliary account in November. If I decide to sell it now, I think I will make a profit of close to 90,000 naira
Yeah.
from, let's say, 360. That's 360,000 to 450,000 naira. So I would make a profit of 90,000 naira
Yeah.
without doing any analysis. Okay, all I
Yeah.
need to do is just
Yeah.
purchase the dollar. If I like, I can keep it in my house under my pillow, or I save it, I put it in my domiciliary account. Okay, so if I decide to sell it now, I would have made a profit, pure profit of 90,000 naira.
Yeah.
Now the price didn't just jump from 360 to 450. There are factors that influences the value of a country's currency. Okay, there are factors that
Yeah.
influences the value of a country's currency. Now, as a trader, that is what you need to study. That is what you need to know, and that is what you need to trade. Okay, you need those
Yeah.
information to be able to make the right decisions. Okay, those information would help you know or define or identify currencies that are weak and also currencies that are what? Strong, so that
Yeah.
you can pair the weak currency against the stronger
The strong one.
currency. So as a trader, that is your duty, that is your work. You need to study these factors. Okay, we have the technical factors and we have the fundamental factor.
Focus.
Okay, so
Mm.
we'll look at that in subsequent classes. So that is the similarity between forex trade and the forex market and the stock market. Okay,
Perfect.
you invest in economy in the forex market, and you invest in companies when you buy shares of that company. Okay, so why do people trade
Yeah.
forex? We want to earn extra income. Okay,
Yeah.
you
Yeah.
want to attain financial freedom. That is why most people trade forex markets. Okay, and forex is a
Yeah.
business that involves, like I said, the buying and selling of currencies. Therefore, the primary objective of everyone who participates in the forex market is to make money. Okay,
Yeah.
so what are the benefits the forex market offers? What are the benefits the forex market offers? Why is it that so many people are venturing into forex trading? They want to trade forex. Okay, now first, you don't need an office to operate forex, to participate in the forex market. You don't need an office. The forex market is sometimes referred to as over the counter market. Over the counter market, that means you don't need an office, you don't need staff. All you need is
Mm.
just your mobile phone, your laptop, okay, that is
Mm.
connected to the internet. That is all you need to trade forex. Okay,
Yeah.
also the market is a 24-hour market. The market is a 24-hour market. The market opens 10 p.m. I'm using Nigerian time. 10 p.m. in
Mm.
Nigeria on Sunday. 10 p.m. in Nigeria on Sunday and closes on Friday, 10 p.m. Nigerian time. Once the market
Yeah.
opens on Sunday, it does not stop till it does not close till Friday, 10 p.m. Okay,
Okay.
so you can decide which of the time is convenient for you to trade. So you can trade at your own convenient time.
Okay.
Okay, now why is the market 24-hour? Why is it that it's non-stop from Sunday to Friday? Now we have different market session. As you know, we have different time zones. Okay,
Yeah.
we have
Yeah.
different time zones and we have different market session. Now the 10 p.m. Nigerian time is 8 a.m. in Asia.
Yeah.
Are you with me?
Yes.
10 p.m. Nigerian time on Sunday is, I think, is about 9 a.m. in Asia. Sydney, Tokyo, Japan. Okay, it's 9 a.m. in those countries. So as we are going to bed here in Nigeria, they are starting businesses in Asia.
Yeah.
Okay, so the Forex market opens in Asia on Sunday 10 p.m. Nigerian time. So from 10 p.m. Nigerian time, the Asia market will be open till about 6, 7 a.m. Nigerian time.
Yeah.
Are you with me? So it will run from
Yes.
10 p.m. Nigerian time to about 6, 7 a.m. Nigerian time. Now the London session would start from 7 a.m. no 6 a.m. Nigerian time. Okay, 6 a.m.
Okay.
Nigerian time, because I think 6 a.m. Nigerian time is 7 a.m. or 8 a.m. in London. I think it's 1 hour difference,
Yeah.
right? So 6, 7 a.m. the London market would be open by 6 between 6 and 8 a.m. Now, if you look at it from, I said the Asian market will run from 10 p.m. to about 7, 8 a.m. in the
Yeah.
morning Nigerian time. So
Yeah.
between 6 a.m. and 8 a.m., you would have 2 sessions running.
Yes.
You have 2 sessions running. You have the Asian market and the what? London market between these hours of 6 and 8 a.m. Okay, so that
Yeah.
period where you have 2 markets running is called lapping session. It's a lapping session. Okay,
Yeah.
lapping session. So when you have 2 markets running, what do you expect? When you have 2 markets running,
Okay.
you expect increased volatility,
Okay.
right? You expect
Yeah.
increased volatility because you have more traders trading that period.
Okay.
So the liquidity will be very high, then the volatility also what would be very high. So that period is called a lapping session. Another benefit the market offers is what we call leverage. Leverage, okay?
Yeah.
Leverage. This is the most attractive benefit. Okay, this is the most attractive benefit. This is the reason many people are venturing into forex trading. Leverage, which I defined earlier, it's a tool that affords you the opportunity to purchase high contracts with small amounts or with small capital. And it comes with what? High risk. Okay, it comes with what?
Yeah.
High risk. That's why it said that
Iris.
leverage is a two-edged sword. It can work against you and it can work to your advantage. A lot of traders don't understand leverage. And because they don't understand, it works against them. This is the major reason 90% of traders lose money. Leverage. You hear people tell you they lose $1,000 in 1 week. Some even lose
Mm.
$10,000 in a day.
Mm.
You see, lose $10,000 in a day, and that's because they don't understand leverage. Now, many people understand leverage. Many traders understand leverage. Okay, but greed will not allow them utilize this tool the way they're supposed to utilize it. Greed.
Mm.
They want to double their money overnight. so that the whole world will know that Forex pays. That is the challenge. That is the problem of many traders. Every trader wants to show that Forex pay after trading maybe in 24 hours or in a week. So they take high risk on their account.
Yeah.
Okay, so this is the major reason 90% of traders lose money in the Forex market. They take too much risk on their capital. Okay, so
Yeah.
we'll talk more on leverage. You need to understand leverage well. This one is a topic on its own. And in subsequent class, I'm going to break it down what leverage is, what leverage you should apply for when you're trading, and how to use leverage to your advantage. Yeah. Also, the market has a high liquidity because the Forex market is so enormous. It's also extremely liquid. This means that under normal market conditions, with a click of a mouse, you can instantaneously buy and sell at will. You are never stuck in a trade. You can even set your online trading platform to automatically close your position. Yes, you can set those parameters, your stop loss and take profit. You do your analysis, know the prices you want to get out of the market, the price you want to exit at profit or at loss. You set those parameters. Once you set those parameters, you can go and do other things. Okay, just close your platform and your broker will do the needful. Okay, so we also have what we call free demo accounts. Free demo accounts. Now, before you start trading with your real money, okay, your
Yeah.
broker will give you access to a demo account. A demo account is a practice account. Okay, so they
Yeah.
will fund your demo account with virtual money, with demo money, money you can't withdraw. No matter how much profit you make, you cannot withdraw. Okay, so they will give you
Yeah.
access to a demo account. They will fund it with whatever amount you want to start with. It could be $100,000, it could be $10,000, but it is advised that you start with money you will the money you start with money you intend to start with on a live account. So if it is $1,000 you want to start with on a live account, you open a demo account of $1,000 so that you can
Yeah.
have a feel of the returns you would be able to make on your $1,000. So the mistake most beginners do is that when they start demo trading, they start with 100,000 US dollar. Okay, they start with 100,000 US dollar. Some will start with 10,000 US dollar. Okay, they will
Yeah.
start with that. Now, the returns you will be making on 100,000 US dollar will be very high. The return will be very high. Okay, it will be very
Yeah.
high. So if you have that mindset when you start your real account with $100 or $200,
Yeah.
it could ruin your account. You see it now
Okay.
because in $100,000 you can be making in a day, you can be making $2,000, you can be making $3,000 because you're trading with 100,000 US dollar. Because the higher the amount, the higher the capital you have, the higher the lot size.
The profit.
Yes, the profit. So now, if you have that mindset, now you're seeing $2,000 in a day, $3,000 a day, you now bring in that mindset on your real account of $100 or $200, you will blow that account. That is the mistake most beginners do. They want to start with $10,000. What you know you can't afford to start with on a life account, and a life account, you start with a demo account. So when you start trading live account, you want to achieve the same results that you add on your demo account. So
Yeah.
I advise that when you want to start demo trading, you start with the same amount you plan to start with on your real account. Now, demo account is not different from a real account. The same price feed on the live traders get from their broker is the same price feed you will get on a demo account. There are no difference. Okay, the same exchange rate you
Yeah.
see on a live account is the same exchange rate you have on a demo
Demo.
account. The only difference between demo and real account is that you cannot withdraw the profit that you make on your demo account, and
Demo.
also when you make losses, nobody will hold you responsible for the losses. Okay, but on a
Yeah.
real account, when you make losses, You would be responsible for those losses, okay? And when you make profits, you can withdraw your profits to your bank account.
Can't.
That is the difference. Now, another difference between demo and real accounts. Demo will always be what? Demo. Real
Yep.
accounts will always be real. When you are demo trading, you know that when you lose your money, nobody will hold you responsible. So sometimes you
Yeah.
could be careless. Okay? You could be
Yeah.
careless executing some trades on a demo account. Your emotions don't get attached to trading when you're trading a demo account, right? But when you start live trading, your emotions of fear and greed comes into play. That is why sometimes the result you would achieve or you will get on your demo account might be different from what you will get on your real account. You could place a trade on a demo account and leave that trade to run for 1 week. You won't close it.
Yeah.
Even though if it is running at a loss, you won't close it. But when you start now, you leave it for 1 week, the market will go against you. Maybe at some point it will now reverse and you make profits from that same trade that was at loss. Okay, so on a
Yeah.
demo account, you are patient, you let the trade run. But when it comes to real account, you now place a trade. Once you see profits, just maybe $2 or $3, you want to close it. But on a demo account, when you even see profit of $10, $20, you leave it, say, it will get to $30, it will get to $50. But when it comes to real accounts, you will see $10, you say, no, 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 let me take this $10. I don't want the market to reverse and go and eat my stop loss. I don't want to lose this $10 where they see so. Like they say that a bird in hand is better than 10,000 in the bush. So let me collect this, what was it called? This $10 first.
$10.
Then before we talk of any other. So that is
Yeah.
it. So that is the difference between demo and real. Your emotions will come into play, and that is what you need to deal with as a trader. You will that emotion would always come, no matter how experienced you are. That emotion of fear and greed. A lot of people ask questions: how can I deal with fear and greed? How can I deal with fear and greed? The only way to deal with fear and greed is one is to have a strategy that you are disciplined to follow. You must be disciplined to execute what? Your strategy, and you must have a trading plan.
Yeah.
That's the only way you can deal with fear and greed. It will always come to play. But when you follow your rules strictly, it will save you from blowing your account. Okay? If
Yeah.
no matter how experienced you are, that fear and greed would come into play. So you need to have a plan, you need to have a strategy, and most importantly, you must be disciplined to execute your plan. So 90% of traders lack what? That discipline. So that's the difference between demo and real
Live
accounts.
accounts.
Now you have news, you have different news calendars. You can access, okay, to know what's happening all around the world. Okay, you have access to news for free. You don't have to pay for that. Okay. Then most online forex brokers offer demo accounts to practice trading, along with breaking forex news and charting services, all free. These are very valuable resources for poor and smart traders who would like to own their trading skills with play money before opening a live trading account and risk real money. That's just forex for you. Okay, the same information the smart guys, the big guys have access to, you can also have access to those information. It's just free. You have everything for free online. You have those information online. You can access them for free. You don't have to pay. So next is benefits. Okay, mini and micro accounts. We'll talk about the various types of accounts that exist in the forex market. Mini, we have standard, and we have micro. So when we'll be looking at what leverage is, then we'll look at the various types of accounts you can operate with a forex
Yeah.
broker. So forex broker, who is a forex broker? A forex broker is an intermediary between buyers and sellers. Like I said, the market is referred to as over-the-counter market. So you don't have an office, but you trade currency. So the broker is the intermediary. The aboki, for example, in the example I gave, the aboki is the broker.
Yeah.
Okay, is the intermediary between buyers and sellers. So if I want to buy dollar, I don't have to meet the seller, right? I don't have to meet the seller. Is the
Yeah.
aboki that I have business with, and the seller doesn't have to
Yeah.
meet me who wants to buy the dollar.
It
So
does.
our business is with the broker. Okay, so as a retail trader, you have to go through the broker. You don't have access to the forex market. Okay, you don't have access to the forex market, so you have to go through your what? Your broker. It's just like we have the stock market. If you want to buy shares of a company, you can't go directly to the stock market to buy.
Yeah.
You can't go to the floor. Yeah, you can't go to the floor to buy. You have to go through what? A broker. Same thing
Yeah.
applies in Forex. You can't go to the floor market to buy. No, you have to go through your broker. So
Okay.
your broker have access to the market, to the floor. Then you go through him. You buy from him. Okay? So that's who a
Yeah.
Forex broker is. So we'll talk about things you should consider. In that video I sent to you, I think I mentioned some of the things you should consider before you open an account with a broker.
Yeah.
I stated it in that video. Some of the things you should consider. One is this: the first thing you need to consider is this the registration. You need to confirm that the broker is registered with the body that regulates forex activities in that country where it's
Yeah.
located. Every country has its own body that regulates forex activity. Just like we have CAC that regulates businesses activities in Nigeria, that's CAC. Then you have EFCC that regulates crime and that's in Nigeria. So you have bodies that regulate forex. CBN regulates banking activities in Nigeria. So you have these bodies that regulate forex in different countries. So before you register with your broker, ask them if they are registered with the body that regulates forex in their country. If they are registered, then they should have a registration number. So demand for the registration number, visit the regulating body website and plug in the registration number. If their name pops up, then they are registered. If it doesn't pop up, it means they are not registered. So you can't operate with a broker that is not registered unless you want to lose your money.
Yeah.
Okay, so you need to confirm
Yeah.
that they are registered. That's the first thing you need to confirm before you open an account to the broker. The second thing you need to confirm is the spread. The spread, that is the charges, okay, that your broker charges you
Yeah.
for every trade you execute in the market. Your broker is
Yeah.
into this business to make money. So how do they make money? It
Yeah.
is through the spread, and the spread is the difference between
Okay.
the bid and the ask. Okay, the bid and the ask
Okay.
price, that is what is referred to as spread. It's just like you have when you buy shares, you have the public offer and you have the secondary offer. The public offer
Yeah.
is always cheaper than the secondary offer. If you buy if you
Yeah.
purchased at the public offer, if you purchased a share, maybe like if you bought it at, let's say, 5 naira per unit, when you go to the
Yeah.
secondary market, when you get to the secondary
Yeah.
market, it might be sold for maybe 8 naira or 10 naira. So the difference between the buying price, the price you bought at public offer and the secondary market is like 3 to 5 naira. So that difference is your broker's profit. That's his commission.
Okay.
Okay, so in Forex, it is referred to as what? Spread.
Okay.
Okay, so now things you must know before you start trading Forex. Forex trading isn't a get rich quick business. This is a wrong mindset a lot of people have, and it affects their performance in trading. This get rich quick mindset. I want to hit the millions overnight. That's You must know that it is not a get rich quick business. Like the casino, Forex trading is the platform to gamble with your hard earned money with the hope of becoming a millionaire overnight. You can gamble in this market, but the truth is that gamblers don't last in this market. Who is a gambler? A gambler is someone who does not have a strategy. A gambler does not have what? A strategy. He executes, buy, and sell orders without proper analysis. That's who a gambler is. A gambler trades
Yeah.
with high risk, high lot that is higher than what he can afford. And that's because the broker offers
Yeah.
him or her leverage. So he trades with high risk. And that's because he has this mindset, I
Yeah.
want to get rich quick overnight. I want to make the millions overnight so that the whole world will know that Forex trading pays. So you must learn the art of
Mm.
trading and treat it as a business. Treat it as a business. Forex trading is a business. It involves buying and selling. So you treat it the same way you treat your traditional business, is the same way you treat Forex. The same principles you apply in traditional business, apply same principles on 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 in Forex trading. The same principles. Okay?
Yeah.
Forex trading is a profession, therefore requires time to master. If I tell you you're gonna know everything about Forex after 3 days workshop or after 2 days webinar, I will be lying to you. Okay? If I tell you you're gonna master it,
Yeah.
yes, you will know the basics, right? You know the basics, but you cannot master a profession overnight. Just the same way you cannot become a doctor overnight, you cannot become an engineer overnight, you cannot become a
Yeah.
master of Forex overnight. No, it will take time. There is a process. Okay, it will take time. Yes, you can.
Yeah.
After this class, you will start trading. But like I said, there is a right attitude. There is a right mindset you need to possess to achieve success in trading. No matter how simple the strategy I'm going to teach you, no matter how simple it is, if you don't have the right mindset, you will keep losing money in trading. I can
Yeah.
teach two persons same strategy, but they would get different results because of the way they think. Are you with me? So
Yes, I'm. Okay.
you won't master trading overnight. No, it will take time. Yes, after the class you start trading, yes, but there are a lot of things you will learn along the line. Okay, so you wouldn't say after the class the education has ended or it stops from there. No, this market is a dynamic market. So if it
Yeah.
is dynamic, you have to keep updating yourself. You have to
Yeah.
keep doing research, studying to know what is currently happening in the market. Okay, so learning is what is a continuous process. It doesn't end. I still read every day. I still read books on Forex every day, irrespective of the
Yeah.
years I've spent in this business. I read, I study my charts every day. I spend not less than 2-3 hours looking at the charts every day. This is what most beginners don't do. And you want to become a professional trader, I'm sorry. Okay? I'm
Yeah.
sorry, you have to give in the time. You have to commit yourself. If you want to become a professional trader, you want to do this for a living, you want to build
Yeah.
a career around this niche, you have to commit yourself to learning. It is non-stop.
Yeah.
Okay?
Yeah.
Forex trading, like I said, is a business, therefore it attracts risk. The forex, like I said, is an highly leveraged market, therefore comes with good risk and reward. Before you invest your hard-earned money, ensure you can afford the risk. You should be comfortable with the risk before you invest your hard-earned money. Forex trading is a skill that takes time to learn. Skilled traders can and do make money in this field. However, like any other occupation or career, success don't just happen overnight. Forex trading
Yeah.
isn't a piece of cake. If it's easy, everybody will be doing it. Okay,
Yeah.
so think
Yeah.
about it. If it was, everyone trading would already be what? Millionaires. So it takes time to learn these things. So commit yourself to learning. The truth is that even expert traders with years of experience still encounter periodic losses. That is the truth. Losses are inevitable in this business. You would make losses, but as a trader, you need to ensure that your losses are very what? Small, and your profit is what? High. You need to
Yeah.
minimize your losses and what? Maximize
Maximize your.
profits. Yeah. So that is it. There are no shortcuts to forex trading. It takes lots and lots of time to master. There's no substitute for hard work and diligence. Practice trading on a demo account and pretend the virtual money is your own real money. Practice trading on a demo account. Most beginners don't want to demo trade. They want to just finish the class and start trading. They don't want to demo trade. You don't even know how to use the MetaTrader 4. You are not familiar with the MetaTrader 4. You don't know how to set your stop loss, take profits. You don't know those things, and you don't want to demonstrate. You just want to start live trading after a 3-day or a 4-day webinar or workshop. It doesn't work that way. At least you should demo trade for at least 2, 3 weeks or 4 weeks, depending on the training you receive. You understand? At least
Yes.
after this class, you should if you demonstrate for 1 month, if you commit yourself and you are serious for 1 month, you can go live trading with the support that you'll be getting from me. You should be able
Okay.
to start trading live, but at least demo trade, so that you understand some basic things on MetaTrader 4, how to use MetaTrader 4, set stop losses, where is resistance and support, all those things. Know how to plot your horizontal line, your vertical line, those basic things, you should know them. So within that 1 month, you'll be able to know all those things. That's why we always advise that you should demo trade. And also, there's a lot of things you will discover as you demo trade. Okay, you need to know your personality.
Yeah.
You need to know your personality. That's all these things you will discover while you are demo trading. Which of the time frame do you want to trade? Which of the market session do you want to trade? If you have a day job, you don't want to be trading Asian session because you have to sleep at night. So you
Yeah.
consider London session and New York session. Now, I didn't mention New York session. Now, New York session, like I said, we have 3 market session. New York session starts from 2, I think between 2 and 3 p.m. Nigerian time. Between 2 and 3 p.m. Nigerian time is about, I think, is about 8 a.m. in New York.
Yeah.
Okay, 8 a.m. in New York. So between 2 and 3, while it's 2 p.m. or while it's afternoon here, it's morning in New York.
Yeah.
So now, like I said, London session starts from 7 a.m. to about 5 p.m. That is when
Yeah.
businesses closes in London. So 5 p.m.
Okay.
businesses closes in London. Now, from that time, remember I said New York starts from 2. So between 2
Yes.
and 5, between 2 and 5 p.m. Nigerian time, you have the New York session and London session running at the same time.
Yeah.
So at that period is another what? Lapping session. Remember we first talked about the London and Asian session, lapping session.
Yes.
Now
Yes.
it's New York and what? London.
London.
Now New York will now run from 2 p.m. to about 11 p.m., 12 a.m. Nigerian time.
Yeah.
You see it now. So that time, I think 11, 12 p.m. Nigerian time will be about 5 p.m. in New York. And that's
Yeah.
the time business closes there. So between 10 and 12 a.m. Nigerian time, we have 2 sessions that will
Yes.
be running. That is Asia session and the New York session.
Yeah.
So we have 3 lapping sessions: Asia, London,
New
London,
York.
New York, and New York, Asia.
Yeah.
Okay, so in those periods are very volatile period. Now, the most volatile period or most volatile session is what? The New York and London session. So as a Nigerian, I think that is the best time to trade between
Yeah.
7 a.m. and 5 p.m. Nigerian time.
Yeah.
Those are the best time to trade.
To
So
trade.
as you demo trade, you will know which time frame. Is it daily time frame, 4-hour time frame? I will recommend time frames that you should trade with, but you need to, when you now apply it on a demo account, you will now know the one that is suitable for you.
Mm.
As you demo trade, you will know whether you are the aggressive type of trader or you are the patient type of trader. Aggressive type of
Yeah.
trader, you want to always take action, you want to always execute trade. You always want to
Yeah.
execute trade ahead. And also, if you're aggressive, if you make losses, how do you feel after making losses? So if you are the type that you get angry when you make losses, you might not be able to
Yeah.
trade that kind of, or maybe lower time frames, 15 minutes, 5 minutes. So as you demo trade, you discover your person. That's one thing about forex trading. Forex trading will reveal the real you to you. If you be
Yeah.
honest with yourself, it will reveal the real you. Whether you are greedy or you're fearful, you would know. if you are honest with yourself. But most times, most traders don't want to tell themselves the truth. They don't want to accept that reality that they are greedy or they are fearful. They don't want to accept it.
Yeah.
But the market will reveal the real you to you if you are honest with yourself.
Yeah.
So why traders lose, I've mentioned this, fear and
Yeah.
greed. That is
Yeah.
why traders lose money. So you need to work on this. Like I said, you cannot um these two emotions will always come into play, even though as experienced trader,
Yeah.
yes, you cannot eradicate these two emotions. They will always come to play because of the how volatile the market is. You understand? So they will always come into play. But like I said, with your strategy, with a good trading plan, and and discipline to execute
Yeah.
your plan, at least it can be reduced. Okay, it can be managed. Yeah, it can be managed.
Yeah.
Fear and greed can be managed. Okay, you won't get to the point of you blowing your account. Okay, because you have
Yeah.
trading rules or trading plan in place. Every
Yeah.
trader possesses these emotions, fear and greed. It doesn't matter if you've been trading for 10 years, 20 years, these emotions will definitely be triggered as you trade Forex. Okay, so what are the
Yeah.
tools you need to get started in trading? Like I said, education, that is very key. Most people skip education, they go for capital, and at the end of the day, they blow their accounts. They come back to tell you Forex trading is a scam. They lack the basic information to trade Forex. All they're interested in is, I want to make money, I want to make money, I want to make money, but you've not acquired the basic education. So, what do you expect? You definitely fail in that business. Okay, so you need education, which is very key. You need capital. Then you need a forex brokerage account. You need to open a forex brokerage. Like I said, you have to go through a broker. So you need to open a forex account. Then you need time for
Yeah.
trading. Okay, then you have the MetaTrader 4. Without the MetaTrader
Yeah.
4, you can't trade
Yeah.
forex. Okay, so you download the MetaTrader 4. Your broker will give you access to the MetaTrader 4. And in one of those videos I sent to you, uh, um, in one of those videos you will learn how to trade on MetaTrader 4. I
Yeah.
sent, yeah, MetaTrader 4 and the mobile MT4. So you have two videos there
Yeah.
you have to watch to learn how to trade on those platform. It's a must have. Okay, so
Yeah.
forex brokerage account. Okay, I said we'll talk about the different types of accounts you can operate with a broker when we'll be looking at what leverage is. Okay,
Yeah.
so what next? How to make money in the forex market? The same way you make money in your traditional business, that's the same way you make money in forex. You buy currencies at a lower price and sell at a higher
Yes.
price. That is how you make
Yeah.
money in the forex market. When you understand the technical and fundamental factors, you play with those factors. Okay, know when to buy
Yeah.
and know when to
I
sell.
want
This
to.
is very,
Yeah.
very key. So next thing we'll be looking at is currency pairs. Now, currency are being traded in pairs. Okay,
Yeah.
currencies are traded in what? Pairs.
In
Now,
pairs.
we have eight major currencies. Eight major currencies. Okay, and when we use the word
Yeah.
major, they are the most traded currencies, the
Trading
most
currency.
demanded their currency. So we have the US dollar, we have the Great Britain pounds, we have euro, we have Canadian
Yeah.
dollar, we have Japanese yen, we have CHF, which is on Swiss francs, we have Australian dollar, and we have the New
Yeah.
Zealand dollar. Those
Yeah.
are the eight major currencies. Okay, the majors are the
Yeah.
most liquid and widely traded currency pairs in the world.
Yeah.
Now, we have what we call the major currency pair. Major currency pair. Now, these
Yeah.
are eight major currencies. Now, we
Yeah.
say a pair is a major currency pair when you
Yeah.
pair, when you trade one of these major currencies
Yeah.
against the US dollar.
US dollar.
Yes, that is when we say that pair is a major currency pair. And as you can see,
Yeah.
we have the Euro US dollar, we have the Great Britain pounds US dollar, we have USD JPY, we have USD CHF, USD Canadian dollar, Australian US dollar. All these pairs contain USD, trading one of the major currency what against the US dollar. Can you see that?
Yes, I can.
Okay, so that is a major currency pair. Then we have another one called the cross currency pair. Cross currency pair. Cross currency pair. When you trade a major currency against
Yeah.
another major currency besides the US dollar, that
Yeah.
pair is called a cross currency pair. Let me
Yeah.
repeat that. When you trade one major currency against another major currency besides the US dollar, it is referred to as a cross currency pair. So we have the Euro JPY, GBP JPY, Euro Canadian dollar, Euro GBP, Euro CHF, Euro Aussie, GBP CHF, GBP Canadian. These pairs, they don't have any business with the US dollar.
Yeah.
Okay, you're trading one major currency pair against another major currency pair. Now we have another pair called the exotic pairs. Now exotic pairs, when a currency of an emergency, an emerging economy is paired with a major currency, they are referred to as exotic pairs. Traders rarely trade these pairs due to low volatility and huge spreads. Brokers charge a lot of huge spreads when you trade these pairs. Okay, so examples of such pairs are the US dollar. We have US dollar against the Hong Kong dollar. We have US dollar against the Singapore dollar. These are Singapore, Hong Kong. These are emerging economy. You have US dollar against the South African
South
rand.
Africa.
Yeah, you have US dollar against this is I think this is Thailand currency, THB.
Yeah.
Thailand currency. Then you have USD against the Mexican what's that the currency? This is Mexico currency.
Yeah. Okay.
Okay, so that is exotic pairs. Next we'll be looking at is how to read a forex quote. Currencies are always quoted in pairs. For example, we have the GBP USD or USD JPY. Now, the reason they are quoted in pairs is because in every foreign exchange transaction, like I said earlier, you are simultaneously buying one currency and selling another. Now, here is an example of a foreign exchange rate for the British pound versus the US dollar. Now, as you can see, we have here GBP against USD. What does this mean?
Yeah.
GBP against USD. Now, what this means is that for you to purchase or to get one Great Britain pound sterling, you have to pay 1.51258 US dollar to get
Yeah.
GBP USD. It's just like when we say USD against the Naira, USD
Yeah.
against the Naira. So if we say USD against the Naira is 360, it means we have to pay 360 Naira to get one USD. So it will be
Yeah.
USD
Sorry,
against
Marius. Hello. I
NGN.
come.
All
Hello.
right. All right.
Sorry, Marius. I said my mommy.
All right.
Mommy.
So, like I said, now you have to pay 1.51258 to
Yeah.
US dollar to get one GBP.
Okay.
So yeah, we have GBP, we have US dollar. Now, the first currency on any pair, the first currency that appears on any pair, which is by the left, okay,
Yeah.
is referred to as the
Yes.
base currency. This is
What?
the base
Okay.
currency.
Base. Okay.
Yeah, this is the
Okay.
base currency, and this is what the quote. This is the
Okay.
quote, or it can also be referred to as counter currency. This is the base.
Okay.
This is what counter
Quote.
currency. Now, the first listed currency to the left of the slide is known as the base currency. In this example, the British pound, while the second one on the right is called the counter or quote
Counter.
currency. In this example, it is the US dollar. When buying the exchange, when buying, the exchange rate tells you how much you have to pay in units of the quote currency to buy 1 unit of the base currency. In the example above, you have to pay 1.512582 US dollar to buy 1 British pound. I explained that already. Now, when selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. How many units of the quote currency you get for selling 1 unit of the base currency.
Currency.
So if you sell GBP in this case, what you will get is what? 1 point what?
512
51258 US dollar.
dollar.
Yeah. So that is that. And next is in the example above, you will receive 1.5 US dollar when you sell 1 British pound. The base currency is the basis for the buy or the sell. The base currency is the basis for the buy or the sell. Now, when you buy a currency pair, what you're actually doing is what you are buying the base currency and what selling the counter or the quote currency.
Okay.
When you place a buy on any currency pair, you are buying the base currency and what selling the quote or counter currency. Like I said earlier, if you decide to buy a currency, what will be your expectation? What will be your expectation?
To sell at the higher equal.
Yeah, so you expect the price to go up, right? So that you can sell
Yeah,
at a
okay.
higher price.
Higher rate.
So in this case, Euro USD, for example, which is a pair, if I decide to buy Euro USD pair, what I'm actually buying is the euro and I'm selling USD. So I
Yeah.
expect euro currency to appreciate against the US dollar. That is why I want to
Yeah.
buy euro USD.
Okay.
So if I decide to sell euro USD, I expect that euro,
That's you are buying the euro cheap. Are you buying it cheap?
yes,
Okay.
if I buy, I'm buying cheap. Okay,
Okay.
I'm buying
Okay.
cheap to sell at a higher price.
Yes. Yeah.
So if I decide to sell euro USD, if I decide to
Yeah.
sell euros USD, that means I expect euro to lose value against the US
Okay.
dollar.
Okay.
So since it's going to lose value, I don't want to hold it. So what will happen is that I would sell it and buy US dollar. Since I know US dollar would appreciate in value against the euro dollar, so I would buy
Yeah.
US dollar, hold US dollar. When the value of US dollar now increases, I would not sell it
Okay.
and make what? Profit. So in Forex trading, you can make money in the upward direction when the price is going up. You can also make money when the price is falling.
Yeah.
Okay? So this simply means that you
Yeah.
are buying the base currency and simultaneously selling the quote currency. You would buy the pair if you believe the base currency would appreciate, that is, gain value relative
Yeah.
to the quote currency. Okay, and you would sell the pair if you think the base currency will depreciate or lose value
Okay.
relative to the what? The quote
Good
currency.
coins.
Okay, so the next thing
Yeah.
we'll be looking at now is what? How to define the market trend. I said earlier that there are factors that influences the value of a currency, a country's currency. Okay, so as a
Yeah.
forex trader, before you execute any trade in the market, you must know the trend of the market. You must know what is happening in the market. You must know the direction of the market. You cannot be trading against the trend. You will
Yeah.
struggle to make profit when you're trading against the trend. It's just like swimming against the tide. You would
Yeah.
struggle. Okay, so you flow with the trend. So as a trader, you need to know the trend of the market. What is
Yeah.
influencing the market? What is influencing the move of the market? Okay, so how do you define the market trend? There are two major approaches, which is the fundamental approach and the technical approach.
Approach.
Fundamental analysis and technical analysis. Now, what is fundamental analysis? Fundamental analysis is a way of looking at the market through economic, social, and political forces that affect supply and demand. That is what fundamental analysis entails. In other words, you look at whose economy is doing well and whose economy sucks. So if Europe is doing well and US dollar is not doing well, you want to trade euro against US dollar. You want to buy euro and sell off US dollar that is not doing well.
Yeah.
Okay, so the idea behind this type of analysis is that if a country's economy is doing well, definitely their currency will also be doing well. This is
Yeah.
because the better a country's economy, the more trust
Zero trust.
other countries have in that currency. So they want to invest in that currency, in that economy.
Yeah.
Okay, so there are a lot of fundamental indicators, fundamental um, factors that influence um, the market. For example, let me give some example. We have the unemployment rate, we have gross domestic products, we have non-farm payroll, we have consumer price index, then we have interest rates, we have political instability, natural disaster, war. These are fundamental factors that have negative impacts. Okay, they have negative
Yeah.
impacts and it could be positive, depends on the value that is released. So if you want to be a fundamental trader, so using analysis now, we can categorize traders into two. We can put them
Yeah.
into two categories. We have fundamental traders and we have
Yeah.
technical traders. So if you want to trade with fundamental, you need to study this, know these fundamental indicators, fundamental factors that influence the market, and you should know how to trade these indicators. Okay, so there are lots of factors, fundamental factors, a lot of factors. I don't trade fundamentals. I'm a technical trader. Okay, I'm a
Okay.
technical trader. I don't trade fundamentals. Okay, well, you can take your time to learn how I know the basics of fundamentals. Okay, I know the basics of fundamentals, but I don't apply it in trading because fundamental
Okay.
analysis is a very broad subject. Is a very
Okay.
broad subject. Now, for example, if I want to trade Euro USD, first I need to study the Euro economy first.
Oh.
Then I also study US economy. So if a news is
Okay.
coming, if an unemployment rate is coming from Europe, okay, if unemployment rates,
Okay.
if Europe will release their unemployment rates, let's say today, I would have to go and look at what maybe the previous data for that was released from the US on unemployment rates. The unemployment rate that was released from US maybe previous week or few days before Euro. So I need to compare the data, the values. You understand? So there are a lot of
Yeah.
other factors. Now, at the same time, they could release on non-farm payroll from US, and at the same time they
Yeah.
could release unemployment rates from US. They could also release interest rates the same day. So it's a lot of
Okay.
work. Yes, you need to now start comparing interest rates, comparing unemployment rates. So it's a whole lot of work. There are people that are good at that. They specialize on
Yeah.
fundamental.
Fundamental.
Yes, they are very good at that. So you just have to know which one you're good at after doing your study, after doing your research, and after trading in the market. You know which one. If you can, if you can, if you can understand fundamental analysis and technical analysis, you can apply both. Are you getting me? You can
Yes.
apply both. You even have, it gives you an edge when you know fundamental and you also know technical analysis. You
Yes.
understand? It gives you an edge. It helps you make informed decisions. Okay. For example, I might
Yeah.
be looking at my technical, my charts. My strategy could tell me to buy a currency. Okay, and
Yeah.
let's
Yeah.
say the news, there will be a news coming from US by
Yeah.
let's say US by 2 p.m. Nigerian time, and at that time
Yeah.
my strategy tells me to buy, let's say, Euro USD. I decide to buy Euro USD. Okay, at that time, my strategy tells me to buy, but a fundamental news, a news is to be released in the US by that time, 2 p.m.
Yeah.
So if I don't have information, if I don't have that awareness that okay, there would be a news by 2 p.m. If I
Yeah.
don't have that information, I would execute a trade,
Yes.
right? I will execute my technical strategy. I would buy.
Mm.
But the fundamental news, that news that will be released, if it is released and it favors US, if
Mm.
it favors US, it will go against my
Yeah.
technical analysis.
Okay.
Are you getting me? Fundamental is what actually moves the market. When a news is
Okay.
released, you expect more volatility, increased volatility when news is released. Because at
Yeah.
that time, that's the time most of these big players trade.
Yes.
Those big banks like
Okay.
Barclay banks, we have JP Morgan, okay? So all these big banks,
Yeah.
they trade fundamentals. They trade fundamentals. And that is why sometimes I
Okay.
advise retail traders not to trade, or small traders, newbies, not to focus on fundamental analysis, because you'll be trading with all these big players. You'll be
Yes.
trading against them. So it's a lot of work. So just focus. That's why I suggest that you focus more on your technical analysis.
Technical
Then you can,
analysis.
over time, you can read materials on fundamental, own your skill on fundamental. For a start, just start with what? Technical analysis. Give more attention to technical analysis, because you are a small trader, you are a retail trader. Okay, your $200 cannot move the market. Your $400 cannot move the
Yeah.
market. But when these big banks
Yeah.
come into the market, they throw in millions of
Yes.
dollars. They throw in millions of dollars. So they move the market in their direction for a given period of time. Okay,
Yeah.
every financial market is controlled by what? Big players, the rich guys, those who have billions. They can move the market to any direction they want to. You get me? Those guys
Yes.
can move markets to any direction they want to. So as a small player in the market, you have to what? Protect yourself. That is where risk and money management comes into place. You will not always win all your trade because of these big players. We don't know when they will come into the market and throw in their millions. Yes,
Yeah.
your technical analysis is showing you a perfect setup. Your technical, it could be that immediately you enter that your perfect setup, that is when these big players will now come into play and trade
Will come.
millions, and they will trade
Yeah.
in the opposite direction. You
Yeah.
see it now. So we don't know when they will come in. That is why you have to set your stop loss. That okay, if this guy is coming at any time, okay, worst case, this is how much I'm willing to lose on this trade. You set it and leave it, and let's see what will happen in the market. If they don't come in, the market goes in your direction, you take profit. If they come in, you are prepared. Okay, so you are
Yeah.
prepared. So that's just it, and that's why you can losses is inevitable in this business because of
Yeah.
these big players. You understand?
Yes.
And in
Yes.
trading, some traders must lose for other traders to make profits. That's the truth.
Yeah.
So you have to be informed. Some must lose, some
No.
would make
Man.
profits. Yes. So it's just it. That's just the truth. So it depends on your skill and how informed you are. Okay.
Yeah. Yeah.
So then before we end tonight's class, I will take you to one of the websites where you can access news, okay, from
Yeah.
different
Yeah.
parts of the country. Like the news that will be released for next week now, you have
Yeah.
an idea, you understand, of what
Yeah.
news you should expect for next week. So if you want to trade the news, you prepare, you plan for
Yeah.
the release. Okay. So you have the next one is technical analysis. Okay.
Yeah.
Technical analysis is this. What you see here is technical
Okay.
analysis. Your MC4. This is what technical analysis. You can see on my line and you can see all this indicator here. This is what
Yes.
technical analysis is all about. And that is what I will be teaching you in subsequent classes, how to read these things you see. Okay, so that's what we'll be looking
Yeah.
at. So technical analysis is what? Is the study of price movement. In one word,
Yeah.
technical analysis equals what? The MetaTrader 4. That's the chart. The idea is that a
Yeah.
person can look at historical price movements and based on the price action can determine at some level where the price what will go. We look
Yeah.
at price history. What has happened in the past is likely to repeat itself now and in the future.
Yeah.
Okay, so what we actually trade
Yeah.
as traders, what we actually trade is what we call it patterns, and patterns
Yeah.
repeat themselves. So when you are looking at your
Okay.
chart, you want to observe or take note of these patterns. That is why you backtest. There's what we call backtesting. Okay, you observe.
Okay.
When you backtest, you see what has happened in the market. You can go back to as
Yeah.
far as let me go back to the chart. Let me go to daily. Okay, hold on. You can go back as far as few minutes. I think 2009. This we are looking at OC JPY. But let me go to the weekly. That will be faster. So you can see from 21st of November 1999. You can see
Yeah.
you have all the datas. You have all the datas from 1999 till date. So you can
Yeah.
go back and look at what has happened in the past. If it has happened in the past, it is likely to repeat itself. That is what we trade. We look at the chart, we study this pattern and look for opportunity. When they show up, we take advantage of that opportunity. When those patterns that have
Yeah.
happened in the past repeat themselves now, that is what
Mm.
we trade. That is what we look out for in trading. Okay.
Yeah.
So by the
Yeah.
time you'll be done with this class, you will be able to identify some patterns and be
Yeah.
able to take advantage of those patterns. So that is that. So technical analysis, you look at price history, and with that, you can make buying and selling decision. By looking at charts, you can identify trends. Like I said, you must know the trend and patterns, which can help you find good trading opportunities. The most important
Yeah.
thing you would ever learn in technical analysis is what is the trend. There's a saying that goes, the trend is your friend. Okay, the reason
Okay.
for this is
Yeah.
that you are much more likely to make money when you can find a trend and trade in the same direction. Technical analysis can help you identify these trends in its earliest stages and therefore provide you with very profitable trading opportunities.
Opportunities.
Okay, so before we end tonight's class, let me take you to the website that you can have access to news or events. So you can see today is Thursday, and these are the news that was released today. You can see these are the news that was released today. We have one came from Great Britain pounds, from Great Britain, Japanese yen, New Zealand. So these are news. Now you can see this news um, indicators, these fundamental indicators, they have um, their impact on the market varies. Okay, their impact on the
Mm.
market what
Mm.
varies. Now you can see these folders in different colors. You have yellow, you have violet, and you have red. Now this one is of low impact.
Okay.
Okay, news like this
Okay.
are of low impact.
Mm.
Then you have news like this. This is Bank of England Governor Bailey speech. These are the one that determine the interest rates. So when they want to speak like that, it's of high impact. It has high impact on the market when the governor of a bank wants to speak.
Mm.
Bank of England, just like CBN, when the governor of CBN bank wants to speak, it will have effect on the it have great impact on the currency of that country.
Mm.
So this is a
Mm.
major news of it has high impact on the market. Then
Yeah.
you have this one is of medium impact. Okay, medium
Yeah.
impact. So you can see the values here. Okay, you can see the values
Yeah.
actual, you have forecast, and you have the previous value. Okay, so before they release this actual, you would have access to the previous value, and most economists would have done their own analysis and they will tell you, okay, this is what we are expecting, and that is the forecast. Okay, so you
Yeah.
have access to the previous value, you have access to the forecast, and you can see The previous value here was GBP was 44%. The forecast
Yeah.
was 39%. So they were
Yeah.
expecting the value to drop.
39.
Yes, they were expecting it to drop. The previous was
Yeah.
44, so they expected it to what? Drop.
Yeah.
And what happened when they released the actual? What happened?
Just I.
It was high. Now, though what you have here is of low impact, but because of this surprise, it could have high impact on the market
Yeah.
because you can see the difference: 44,
Yeah.
61, 39, 61. So even though it's of low impact, it could have high impact on the market, depends on the value. The same thing apply
Okay.
on JPY. See the value here, 1.65. Forecast, 1.50. Previous,
Yeah.
0.96. What was released? The difference was very much. So it could
Okay.
have high impact. So forget that this is of low impact. No, this one depends on the value that is released. It could have high impact on the market. So all this one means the actual value is better than the previous value and the forecast. So you expect GPP. Once this news is released, you expect GPP to be strong.
Okay.
You see it now. So that's how they
But you
analyze.
just opened this one now. I mean,
Which one?
because what I'm seeing, this particular screen,
Yeah, Forest Factory.
because what I'm seeing here is different on my own.
What are you saying?
The 61 on my own is 49.3.
Are you sure?
I just load
Is it
it now.
is it Forex
Maybe
Factory you're
that's,
looking at?
yeah, it's factory.com.
It can't be. It has to be the same value.
Reload it. Let me see.
It has to be the same value. It can't change. What are you seeing? You said you're seeing what? 49 point
Mine
what?
is 49.3. Okay, it has changed again.
You've refreshed it, right?
That's,
I think
yes,
this
I
is what you are
refreshed it now.
seeing. This is what you are seeing. You are seeing this JPY 49.3. That's what you're seeing. Economic watcher
Okay.
sentiment.
Okay. It's the same now.
Okay, good. So you have Euro, German trade. The news released was the actual value was weaker or less than the previous and the forecast. So
That means it's in fall.
yeah, it will
Okay.
affect euro. It will affect euro immediately they release the this value. So the difference between the previous and forecast will determine if this news, which is supposed to be of low impact, would be of high impact. The difference between the previous and the actual value. Okay, so you can see the difference here: 18.0 to 15.7. The difference is much.
Oh,
So
yeah.
it could have high impact on euro. So that is how most economists or most fundamental traders trade the news. But there is more. There is more to this. Okay.
Yeah.
Okay. So there is more to
Yeah.
this. It's a very broad subject. I have some books on fundamentals. Okay. So if you want to learn about fundamentals, I could send you those materials and you
So
study.
all these ones are fundamentals, have you?
Yes, fundamentals. Now for tomorrow night, if I want to see what happened tomorrow, the news, I'll just click forward here, go to October 9. So October 9, you can
Okay.
see these are the news that will be released tomorrow. By 1:30 a.m., we are expecting a major news from Australia. Then 1:30 p.m. tomorrow, we are expecting a news from Canada. Two news: unemployment rate and employment rate. You see it now.
Okay.
So these are several news that will be released tomorrow. We have the previous value, we have the forecast. So what we are waiting for now is the actual value.
Okay.
If the actual value is better than the previous, we can risk buying JPY. That means at that moment, once the news is released, if it favors JPY will move.
Yeah.
And yes, JPY will be strong. That means most JPY, for example, Euro JPY now, if JPY is the news favors JPY, that means JPY will be stronger and Euro might be weaker. It's a
Yeah.
probability, it's not certain. Okay. I've,
Yeah.
I've had cases that this news now, for example, Canadian dollar now, they might release this the value, and it will favor Canadian dollar. Okay,
Yeah.
it will
Yeah.
favor Canadian dollar, and Canadian dollar will still be weak.
Yeah.
You see it now. So it's possible they will release the value will favor Canadian dollar. But when you are trading USD Canadian dollar, for example, now instead of Canadian dollar to be strong, US dollar will now be pushing or will be stronger than Canadian dollar. Canadian dollar that are
Okay.
supposed to gain value will now be losing value. So fundamental is a
Okay.
very broad subject,
Yeah.
and most fundamental will tell you why this
Yeah.
why even though the value that was released is okay, they will tell you why US is still stronger than Canadian dollar, even though the value that was released is better or favors Canadian dollar. They know how they interpret these things. Probably they would have gone to
Yeah.
look at employment rate, employment change in US, the previous release. Then they will
Yeah.
compare and I don't know how they do it. So, but as a beginner, just focus on technical analysis. Yes, it's good as a trader,
Yeah.
just like what I've shared with you now. It will not be
Yeah.
nice for me to say I'm a professional trader and I don't have the basic knowledge of what fundamental trading is all about.
Fundamentals.
You understand? Now you now attend my class. I won't even mention anything like fundamental. When you go out to hear people talk about fundamental traders, fundamental analysis, and you're like, this coach didn't teach me
Mm.
fundamental. What is fundamental
Mm.
analysis all about? You see it now. So,
Yeah.
so you need to know, at least have the basic knowledge, and you can build on that. So what I
Yeah.
just shared with you is the basic knowledge. You can now further, you can now build on this. Okay,
Yeah.
give it a try. You might be able to understand fundamental, but I've tried. I've read books, but I still don't get it. I'm telling you, I still don't get it. So we'll end
Yeah.
today's class at this junction.
Yeah.
Okay.
Yeah.
So you have any
Yeah.
question?
Yeah, I'm fine.
Okay. This session is recorded, so I will send you a copy. Okay. I'm going to upload it on Google
Okay.
Drive now, and I'll send you the link. So at your own time,
All right.
you can watch.
Okay.
Thank you
Thank you.
very much. So tomorrow we'll be looking at on MetaTrader 4, how to trade
Okay.
on MetaTrader
But
4.
do you think I'll be able to download that on my laptop? That MetaTrader 4?
Why? You should now. Why? Which
Because
which laptop are you?
it's Apple laptop, I don't know. And what I'm
Definitely.
seeing there is Windows.
What?
Okay. I
Yeah,
think I'm
definitely.
seeing Windows before. No. Okay,
Def-
no one.
Definitely. Well, brokers they have Apple version. So when you go to their website, you download the version for
Version.
Apple. Yes.
Okay.
Mm.
Okay.
All right.
No
Thank you
one.
for your time. Have a wonderful
Thank you,
night.
sir.
Yeah. Bye.
Thank you. Yeah.
So that's that for the basics of Forex trading. So if you want to know more about technical analysis, you want to know how I analyze the markets with my unique tools, then you would have to get the full course. Okay, you have to get the full course where I shared 4 indispensable tools you need for successful trading. 4 indispensable tools you need for successful trading. So all you have to do is what? Click on the order button and we'll take it from there. Thanks for watching, and I remain yours faithfully, Maxwell Emmanuel. I'm always committed to your trading success.